In our last video, we talked about the concept of payment bank, its key features and the key players. In this video, we will talk about the key advantages for various stakeholders and also the challenges the banks may face in future. Now let's discuss about the advantages of payment bank. The first is lower currency circulation expected, especially after government push through demonetization of 500 and 1000 rupee notes. Payment banks using technology, mobile phones and biometric systems, the use of currency circulation in India, especially rural areas, would decrease. Secondly, payment bank is a very low risk model for the consumers. There are three main risks in banking industry, that are credit risk, market risk and operational risk. As payment banks will not sanction any credit or loans to the public, credit risk for these banks is zero. Most of the deposits have to be invested in very safe treasury bills or government securities, and hence market risk is also minimal. And as regulator will monitor their performance closely in initial stages, compliance risk is also very less. However, there is some operational risk related to their implementation, usage and adaptation of technology. So overall risk profile for payment banks is very less as compared to other commercial banks. Third advantage is that the deposits in payment banks are 100% secure and safe. An organization called DICGC ensures bank deposits up to rupees 1 lakh, and now since the maximum deposit to be mobilized by payment banks is rupees 1 lakh, so basically all the money is 100% safe and insured against all risks. Next advantage is their low cost of operations. Banking is a capital intensive business model and commercial banks find it difficult to open branches in unbanked and far-flung areas. With the help of technology and existing business reach, payment banks will provide low-cost services to customers located in remote areas. Therefore, these banks can offer higher rate of interest when compared to commercial banks, and we have already seen that in Airtel's case. Leveraging technology and their existing business reach, these banks will have higher reach to various nook and corner of India. For example, Airtel in their pilot launch in Rajasthan has leveraged their existing 10,000 Airtel retail outlets, which will double up as branches of the Airtel bank. So you will be able to create an account, deposit or withdraw money at all Airtel stores. Aside from a retail store, if you have a smartphone, you will be able to access your account through Airtel Money app. You will be able to check your balance or transfer money. This can also be done by sending SMSs if you have a basic feature phone which removes dependency on smartphones and internet connection. Next advantage is increase access of other financial products. As these banks are authorized to sell other financial products such as life insurance, general insurance, mutual funds and Pradhan Mantri schemes, etc., payment banks will increase the penetration level of these products. Next advantage is easy KYC. 4 out of 8 current payment bank license holders are mobile service providers. So when a customer wants to open an account with payment banks of the mobile service providers, obtaining KYC becomes seamless, as most of these companies would have complied with KYC guidelines for providing the mobile phone connection, internet, D2H or landline connections. Hence, these providers can open an account to all their existing customers by default. Those who wish to use the account can begin operations without the hassle of any documentation. Next benefit is, from time to time the Government of India and state governments offer various subsidies and benefits to the people, particularly the social security schemes. These benefits will now directly be credited to beneficiaries through payment banks. And last and probably the most important advantage is, the payment bank would be able to provide a better financial education to rural population. And the activation of these banks across the country will also lead to decline of chit funds and other unauthorized institutions that exploit our rural population. With so many advantages, there are quite a few challenges as well. And due to these challenges only, 3 out of 11 players selected have surrendered their licenses. The first is, since payment banks are not allowed to lend and give credits, it will limit their earning potential by quite a bit. Secondly, competition has intensified in digital money transfer space with e-wallets and banks joining the race with UPI. Due to this, the payment banks will have to offer high interest rates on deposits, which will reduce their margins. Furthermore, government initiatives such as Jan Dhan aimed at unbanked population have considerably reduced the scope of doing business for payment banks. It is unlikely that target segment will manage two bank accounts at same time. Again, high deposit rate would be the key attraction point. Now with the limit of rupees 1 lakh deposit only, the whole business become very volume driven and not value driven. Also, there is a high cost of setup and run operations. Target segment is irregular and unpredictable in savings. And then there is a huge cost of education to the target segments, both from technology perspective as well as financial products perspective. And last major challenge is there is a dependence on external factors such as internet connection and phone connectivity in that area. Surely challenges are huge, but with innovative products, extensive technology usage, doing the right partnerships and leveraging their existing business reach and business models can make payment banks a big success story and could be a big step towards Prime Minister's vision of a cashless society.